Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh, and in the last segment, we covered some topics on the relationship between certain things are, and it was the weatherman example that I gave. We are a weatherman in the markets, whether it's stocks or options or futures or Forex, and we are forecasting what could happen, what to prepare for. Not telling you when to do that yet. But when you get the odds and your probabilities in your favor, then it says, now it's time to open the umbrella. Or basically, now it's time to either buy or now it's time to sell in the financial market. So the relationship between a meteorologist and a stock trader is actually very similar. And I like to give these examples because it's us as adults, we learn with examples and something we can visualize. And that's one of the great things that Online Trading Academy does is we got several instructors, about 40, 50, 60 instructors. And it's not that they're just good traders and investors. They know how to teach. That way us as adults can learn how the financial markets actually work and how to make smart and intelligent decisions within them. If you did miss tickets for the seats for the investing class that we do here locally, these are classes we do on the weekdays, the weekends, we do them in the evenings as well. Just simply text the word investing to the number 210 for 2 seats for this class and the jumbo pack. Make sure to subscribe to the podcast, to Investing and Trading Live, whether you listen to it on Apple Podcasts, iHeartRadio, Spotify, or wherever you listen to your podcast, what do you want to call it? Podcast episodes. So that being said, Al, we were talking about that supply and demand and being in the positions before it actually happens, being whether you're long the market or short the market, and forecasting that, and then being able to make your decision before it happens. Now, that's supply and demand. That's the economic law of supply and demand on a price chart. Let's give a little more of visualization on what that actually looks like so our listeners can kind of visualize that. Obviously, when they come into these investing classes, they'll be able to see it more of a hands-on approach. But at least let's introduce them to that supply and demand technique on the radio waves here, and then we'll offer some more classes for them if they want to come in.
Well, imagine, if you will, a price chart, a candlestick price chart. And by the way, in these classes, we go over what a candlestick price chart is and what the differences in the different shapes and sizes are. But imagine, if you would, on a price chart, in a zone, let's say a band, where you have identified with a high degree of accuracy where big institutional activity is going to take place. In other words, you've got maybe millions of buy orders that are not active yet, that are waiting to become active as soon as the price hits that zone, that band. And then you've got the same thing where sell orders are, where the big institutional sell orders are. So basically, you're kind of looking for two bands or two zones. One is that where you have more demand or more buyers.
Yep.
One is where you have more supply or more sellers.
So
that's what moves the market either up or down.
Okay, so that's not an exact price then, is it?
No, it's an area. It's an area. What we want to do is give you the highest and you used this word before, the highest probability of something working in your favor. You cannot be exactly precise. I mean, it's almost impossible to identify right down to a decimal point what the price of something is going to be when it changes.
Yep.
But there's an area there, and that area really reflects two things. One, if it's an area where there are buy orders, that's an area where the big institutions, the big Wall Street banks, the pros have identified where something is of value.
Yeah.
That's where they want to buy, in that range. They also, in that other band where you have the sell orders, that supply zone, that's where they have determined that something is overvalued when there's enough profit for them to actually start selling. So the only important things really to identify, when you think about it, if you're going to buy something, the price has to go up for you to benefit. If you're going to sell something, price needs to go down. But it's the difference, it's the range between the buy orders, the demand zone, and the sell orders, the supply zone. That's your profit. And that profit has to be enough to balance any kind of risk that you're taking.
Yeah, and a good example, if you listen to the podcast, it was 835 or 836. We did a show and we were talking about the S&P 500. and we talked about a demand zone in the S&P 500, roughly between 443 and 440. This is the S&P 500 ETF, and this was with high probability and odds that we had identified ahead of time before it even happened. Well, now looking back and going on at looking at the price chart, it bounced right off of that. So
Right.
it's not going to be right every single time, but that's the great thing about having these zones, as Alice talking about, or bands or areas. You don't have to be in at the exact right price because you're not going to get the exact price. Then you wrap around proper capital management, just like Alice talking about, and that's where your consistency comes, because once you're it's just simple math that plays out. You don't have to be a mathematician or anything. It's just the platform will do it for you. But it's a visualized area on a chart where you're getting in your positions. Say you want to buy, it's in demand, and if you want to sell, it's in supply. And that's what we introduce you to these in these investing classes, is how that looks on a price chart, and then maybe starting to potentially identify it, being able to see some of that. And that's one of the big things, is being able to visualize that in a physical setting. And that's when we've been seeing a lot of people wanting to see is actual a place to go and learn about the financial markets. Just text investing to the number 210 to come to one of these classes. So Al, so you're talking about supply and demand on a price chart. Now looking at, let's do a little analysis here for our listeners. Let's just pick a stock out there, maybe an Apple or Tesla, or what's a stock out there that you?
Well, those are two stocks that have good volatility. Nvidia's another one.
All right, well let's look at Apple.
Okay.
And we've been talking a lot about on the podcast about Apple stock and a area or a zone where we like to say there's potential buyers in the market, and it was around $145, $141 mark. Now, price is at $175 right now. Now, if I think Apple is going to be bullish long term, should I just go and buy it right now, or would it make sense or advantageous for an investor to wait to get it down to that price? Because so many people just buy now because it's you can do that.
Mhm.
What are your thoughts on that?
Yeah, well, nothing moves in a straight line. Even these stocks that continue to hit new highs, they will go up for a while and then they'll come back a bit. There's a little bit of a correction, and then they go up and then they correct a little bit. And if you wait until you can identify a position to buy when you've gone through excuse me, through a bit of a correction, you have an opportunity to enter a position where you have the probabilities of it working in your favor much higher, and you also have the opportunity for a much greater profit potential, and also with less risk. If you're looking for something that already has somewhat corrected, it could be just a small correction. If you get in at that point, that also gives you the opportunity to have the least amount of risk on your entry. That's where the opportunity, or the potential, I should say, of it going against you is the least. So there's a number of things that we all look for. We help our students identify to participate in what we call a quality trade.
Mm-hmm.
That's
High
one that
quality,
has
right?
high quality, has the lowest risk at any particular point, with the highest profit potential, and more importantly, the highest probability of it working in your favor. You mentioned, in one of the other segments, and we didn't really go into it, you mentioned the importance of consistency.
Mm-hmm.
And there's two words that I think are really critical for being successful as a financial trader or investor. And one is consistency. One is a plan, having a plan that you follow that's specific to you. But consistency is important.
Hold on one second here. I think that's going to be a full segment talk here.
Okay.
I want to hold that for our next segment. I want to talk about consistency and having a plan in the next segment, because I think you're exactly right. Those are probably the two most important things. And here's that third one here, to have longevity in the financial markets. And the trading and investing is brought on online and social media as a get rich quick thing. There's no such thing. But if you want longevity and you want to be able to have the opportunity and a strategy to build a long-term portfolio at one point, it's going to take a little bit of time. It's not going to happen overnight. And that's what you need, is that consistency and a plan within that. And I want you to discuss that in the next segment. So stay tuned for that. But we have so with these different strategies, we talk about that and introduce you to these in these investing classes. We do these classes during the week, during the weekends, and Al talks about the consistency, having a plan, supply and demand, how that looks on a price chart. He's going to be able to illustrate that for you in real time, right in front of you. And these classes are about 2 hours long. We're local here. We do classes here in Bloomington at our academy. We also have host classes in Maple Grove. We do some in Eden Prairie, Woodbury, just different locations. We're actually holding one here at Mystic Lake coming up soon.
Yeah, right.
I believe that's in a couple weeks. So make sure to check out that Mystic Lake one. That's going to be a nice class for a lot of people coming in. To come into this class, just text the word investing to the number 210 for 2 seats for this class. Text investing to the number 210 and come to one of these locations for an investing class to get introduced to these markets on making smart and intelligent decisions. So, as I said, coming up next, stay tuned. We've got a quick commercial break. We're going to talk about consistency in the financial markets, why that's so imperative, but how you do that is by having the proper investing and trading plan. Text investing to the number 210 for 2 seats. This is Josh and Al. We will be right back.